In recent years, Russia has been making significant strides in diversifying its customer base for its crude oil and refined products. According to recent reports, Russia has found a new market for its fuels in the Middle East, which is traditionally dominated by Saudi Arabia. Russia's state-owned oil company Rosneft has reportedly struck deals with several Middle Eastern countries to supply them with crude oil and refined products at discounted prices. The main cause of the change in Russian fuel export commerce is the evolution of demand in established markets such as the US and Europe. Recent reports claim that Russia's state-owned oil corporation Rosneft has been aggressively seeking new trade agreements with a number of Middle Eastern nations in order to provide them with refined products and crude oil. According to reports, Rosneft is acting in reaction to shifting demand trends in established areas like the US and Europe. Due to a number of variables, including changing geopolitical dynamics, the advent of renewable energy, and the COVID-19 epidemic, the global energy markets are in a state of turmoil. To preserve its market share and income, Russia is trying to expand the locations to which it exports its crude oil. Given the Middle East's expanding energy needs and strategic significance, Russian oil and gas products could find great success there. Discounted rates are allegedly part of Rosneft's agreements with Middle Eastern nations, a tactic intended to outcompete rival oil exporters and get a larger market share. Due to Russia's ability to disrupt established supply lines and grow even more dominant in the market, this might have a substantial impact on both the conventional oil exporting nations and the global oil market. Yet, Russia may be able to take advantage of new prospects and sources of income as a result of its shift to Middle Eastern markets. It also emphasizes how important it is for established oil exporting nations to diversify their economy and lessen their reliance on oil exports. A reliance on a single commodity is not a sustainable long-term plan for economic growth and development, as the world's energy markets continue to change and adapt. One major reason for the decrease in the need for fossil fuels is the global shift towards renewable energy. More nations are turning to greener, more sustainable energy sources in an effort to cut down on carbon emissions and fulfill climate targets. As a result of this change, the market for conventional fossil fuels like crude oil has shrunk. Russia, a significant oil producer, has been impacted by this trend as a result of the market's glut driving down oil prices. Russia has been looking for other markets to sell its fuel and oil products in an effort to combat this. The Middle East has become a new market for Russian fuel exports because it is home to numerous oil-producing nations. The state-owned Russian oil corporation, Rosneft, is said to have negotiated agreements with a number of Middle Eastern nations to provide them with cheap supplies of refined products and crude oil. Russia is attempting to retain its place in the global oil market and reach out to new demand centers with this trade shift. Since the Middle East is one of the few locations in the world where the demand for gas and oil is still growing, it has become an attractive market for Russia. Furthermore, Russia has access to important gas and oil transit lines through the Middle East, which may increase its geopolitical clout in the area. The primary reason behind Russia's attention towards the Middle East as a potential new market for its fuel and oil products is the evolving demand trends in conventional markets like Europe and the US. The demand for fossil fuels has been progressively decreasing as the world continues its shift towards renewable energy. Due to this, there is currently too much crude oil on the market, which has caused oil prices to decline. Russia has been looking for new markets to export its fuel and oil products in reaction to this. Unlike other regions, the Middle East has an increasing need for gas and oil, which has made it an appealing market for Russia. Russia can potentially increase its market share and get into the Middle Eastern market by increasing its exports to that region. Furthermore, Russia has access to important gas and oil transit lines through the Middle East, which may increase its geopolitical clout in the area. Russia's long-term foreign policy and energy objectives may benefit from this, especially given the region's continued importance in the world energy markets. But Russia's growing attention to the Middle East market also begs the concerns of how reliant it is on conventional markets and how flexible it is in the face of a shifting global energy landscape. Russia may need to re-evaluate its long-term energy strategy and diversify its energy portfolio in order to be competitive in a market that is changing quickly as renewable energy sources continue to gain popularity. Russia's growing oil and petroleum product exports to the Middle East have a big impact on the traditional oil exporting nations, especially Saudi Arabia. It is anticipated that Russia would challenge Saudi Arabia's supremacy in the region and threaten its market share as it grows in the Middle East. Due to Russia's access to important oil and gas transit routes, its geopolitical influence is growing, which may cause a change in the Middle East's power dynamics. The circumstance also emphasizes how difficult it is for established oil exporting nations to adjust to shifting market conditions and the worldwide transition to renewable energy sources. It is unclear how Saudi Arabia and other established oil exporting nations will react to Russia's expanding influence in the Middle East as the struggle for market share heats up. Both oil producers and consumers are anticipated to see significant effects from the shifting dynamics of the global oil market. Russia is expanding its oil and fuel product markets, which could result in increasing competition and even a loss of market share for established oil exporting nations like Saudi Arabia. Simultaneously, the persistent excess of crude oil and the diminishing need for fossil fuels could result in additional volatility and unpredictability in the worldwide energy markets prices. In order to reduce these risks, it is therefore becoming more and more crucial for nations and businesses to diversify their energy portfolios and look into alternate energy sources. To sum up, the change in Russia's approach to oil exports to the Middle East emphasizes how the dynamics of the world oil market are evolving. In order to preserve its market share and revenue sources, Russia is looking for new markets as the need for fossil fuels declines. Due to its geopolitical significance and rising energy demand, the Middle East provides Russia with access to important transit routes as well as a possible market for its oil and gas products. But this change in approach also begs concerns about Russia's long-term energy policy and its capacity to adjust to a shifting global energy environment. Moreover, as Russia increases its market share in the Middle East, it is anticipated to upset the established oil exporting nations' hegemony, such as Saudi Arabia, and cause a change in the balance of power in the area. The transition of Russia towards the sale of natural gas and its growing influence in the Middle Eastern market could potentially pose a threat to the established oil exporting nations such as Saudi Arabia. Initially, the battle for market share, Russia will compete with established oil exporting nations for market share as its natural gas shipments to the Middle East rise. The balance of power in the area may change as a result, with nations that formerly relied on Saudi Arabia for their oil now turning to Russia for its natural gas. Second, pricing competition. As Russia's natural gas supply grows, price rivalry with conventional oil exporting nations may result, potentially driving down natural gas prices in the region. Energy source diversification is a final consideration. Middle Eastern nations may also be seeking to do this, and Russia's natural gas supply may be an alluring substitute for conventional oil exports. Overall, traditional oil exporting nations like Saudi Arabia may face challenges to their hegemony from Russia's growing influence in the Middle Eastern energy market, which could result in a change in the region's power dynamics. It is unclear how traditional oil exporting nations will react to Russia's expanding influence in the Middle East as the struggle for market share heats up. And that's it. If you want to continue to learn about business investing and financial education, we have got this video waiting on the screen for you to check out. Don't forget to give this video a like and subscribe for more videos like this. Thank you so much for watching, and I'll see you in the next one.